FBN Holdings, of course, reported its results for 2012. We saw their earnings up 220%, earnings per share to 2.33 naira. Profit after tax rose to 75.9 billion naira, boosted by a strong growth in interest and non-interest income. And so, like I mentioned, I did speak to the CEO, Mohammed Maccido, and here's what he had to say about the number.
Well, let me just say that the last 12 months has been a year of very remarkable and very impressive financial performance for the group. In the year 2012, we posted a profit before tax figure of over 92.7 billion, which is an increase of 158% above what we posted in 2011, which was 35.8 billion. So essentially, within the space of the last 12 months, we have increased the profitability of the group by well over 56.8 billion, which is more or less tripling the performance of the group. So definitely by any measure, one would say that this performance is remarkable. What have been the drivers for our performance in the last 12 months? The first and the very important one is that we have been able to grow our customers' deposits very, very significantly over the last 12 months.
Right.
From 1.95 trillion to over 2.4. So what essentially I'm saying is that in the last 12 months, we have been able to raise our deposit figures by well over 449 billion. Well over 449 billion.
That's fed through into the growth in terms of your interest revenues, etc.
Yes,
all right.
And that's why you can also clearly see that our gross earnings have also jumped remarkably, from 273 billion in 2011 to over 359 billion in 2012.
Okay, speak about the growth of your fees and commissions, though, and the likely impact of the central bank's new rules to regulate things like commissions on transactions. How is that likely to impact your business going forward? And talk to us about how that has developed in your performance in 2012.
Well, definitely the introduction of the new tariffs by the Central Bank of Nigeria, which include a gradual phasing out of COT through 2016, and also the introduction of higher interest rate on savings deposit, from 1% to 30% of MPR, which comes to about 3.6%, definitely is something that will impact the industry. But it is not something that will impact one institution. It is one that will impact the industry as a whole.
Right.
But for us at First Bank Group, what we have done was that in anticipation of the possible changes in tariffs, what we have done since last year was to enhance our retail structure by putting in place an additional 73 branches across the country in areas where we are not located, so as to enhance our overall presence. The whole objective is to assist us in driving the growth of our deposit liabilities. Last year, we grew our deposits by over 23%, outpacing the rest of the industry. This year, what essentially we have done is that by the structures we have put in place, we are sustaining or maintaining our focus on deposit growth as a group.
Right. So you think that the growth in deposits and, of course, the earnings that will filter through will compensate for any loss of COT? Is that what you're suggesting?
Absolutely. There's no question about it.
Okay. Let's talk a bit about the news around First Bank's interest in Ghana. We've heard reports that First Bank is looking to acquire assets there. Can you just confirm the situation exactly?
Well, let me just say that that discussion is truly within the realm of speculation. But we, as an institution that has as our primary vision to be the leading financial services provider in the sub-Saharan African sub-region, our objective is to continue to grow both organically as well as through acquisitions. So where we identify possible candidates and we evaluate and take favorable decisions to this effect, these are decisions that once they are made, we communicate to the market.
All right. So you can't confirm, or you can't confirm those those talks now. Is
Absolutely,
that the point?
absolutely, absolutely.
Okay, let's move on to the market, back to Nigeria and the impact of yields. Of course, yields have come down, moderated significantly over the last 6-7 months. Talk to us about how that is likely to impact your earnings going forward.
Well, truthfully, if you look at it, when yields were up last year, somehow also it did impact on deposit liability growth for the industry, because a lot of customers were moving to purchasing treasury bills. So now, with the advent of lower yield in the fixed income market, definitely you are going to see growth in deposit liabilities. And this is in line with our own objective as a group to continue to grow the deposit profile of the bank. But in addition, you need to understand what we are doing as a group, as a whole. Number one, we are continuing to drive growth in our deposit liabilities, which I said was over 449 billion last year. We are also focusing on the mobile money product.
Right.
Because if you look at the statistics in Nigeria, based on some studies that were conducted, we have about 85 million adult population in the country, of which only 44 million have access to banking services. Now, of those that do not have access to financial services, about 25 million of those are bankable. So what we have done is to introduce mobile money product through our First Money, leveraging on our strong retail franchise, as well as a huge agent network that we are building to be able to at least reach this unbanked market. So we are putting structures, both the immediate, like I mentioned on the issue of branches, as well as intermediate structures that will enable us to continue to grow our numbers and our franchise as a group over the